This is your Lead Left podcast for the week of October 17th. I'm Randy Schwimmer. Welcome back. This week, we continue unpacking the rich content our three top economists provided in last week's exclusive webinar. Here are some key takeaways. Nominal GDP remains relatively high in the U.S., with greater growth reflected in higher corporate earnings and revenues. But real GDP is zero, with inflation remaining persistently high. Third quarter is likely positive thanks to a narrowing trade deficit, but still overall lackluster. It feels like 2019 in the job market. Underemployment is down, but inflation and wages are up. Same number of workers, but 10 to 12 million more jobs. That gap pushes up wages. Labor dynamics today are very different than the old model. Participation rates are lower, so it will take a lot more time for the Fed to influence it. The current pace of 400,000 monthly jobs added dwarfs historic numbers. For telling indicators, look at nominal GDP and consumption. We're in disinflation's early stages. Look at unemployment claims, the ADP wage tracker, and OIS spreads. Also, final sales to domestic private purchases, which isolates consumer spending and private investment. The Fed is also looking at profit margins. If they begin to shrink, it means hikes are working. But hard to accomplish all this, decline in job openings and wages, without increasing unemployment. CPI is rent-weighted with a 12-month lag. A recession analysis of OER and rent shows these are major inflation drivers. Studying past recessions, 100% of the time when Fed had easy money, then hiked, they had to raise rates above predicted inflation rates. The Fed target keeps getting pushed higher. Calls to pause will increase. Early in the year, the expectation was 75 basis points in total rate hikes for all of 2022. Today, that's just a normal meeting. Immaculate disinflation won't happen. November and December will likely each be 75 basis point hikes. Predicting unemployment is tricky. It's tough getting laid off people back to work, so employers are trying to keep workers. They don't want to overfire. Business and consumer balance sheets are much better today. Regardless, expect the economy to bottom in the middle of next year. Reporting from the Labor Room at the Lead Left, this is Randy Schwimmer, wishing you and your families a safe and healthy week.